It's a brand new week. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa, and we start from where we would normally start, which is what's going on with the global oil space. Oil prices, we see they gave up early gains today as stalled U.S.-Iran talks revived concerns over prolonged Middle East tensions, but the absence of major supply outages limited upsides. And so we see for this morning, it's less than what we had on Friday about this time. I remember on Friday we had about $89. About now it's, even though it's a bit of gain, but over the weekend it's dropped a bit to 88.44, and WTI is 81.88. Right, and of course, over the weekend, Iranian Foreign Minister Abbas Araqi said that Iran had not decided to resume talks with the U.S., while U.S. President Donald Trump is asking Americans to accept slightly higher gasoline prices while the conflict continues. And we see 5 commodity vessels transited the strait on Saturday, with none registered for Sunday. Ship tracking data from Kepler shows versus 31 for the prior weekend. And then we had to see the markets, how it closed. That's the Nigerian local bourse last week. For the week, we saw that the oil share closed in the red, 1.20% down, and equity cap also lost more than 1% at the end of the week. Volume and value remained green, but deals was lower than what we had the week before. Looking at the sectors, we see the major sectors closed in the red last week, from banking to consumer goods. Consumer goods lost more than almost 7%. Industrial goods, insurance, oil and gas, they all closed in the red. But top gainers for the week, we saw some gains there. Nationwide Express, International Energy Insurance, and Sovereign Trust Insurance, they had some positive movements around them. On the flip side, AVA, Capital, Unilever, and Zikis, Agro Allied Industries PLC, they were down. Top trades had Fortis Global Insurance, Cornerstone Insurance, and Consolidated. A lot of concentration on insurance stock we saw last week. And talking about still the markets now, the Nigerian Exchange Group, that's the NGX, they've postponed the planned rollout of a revised pricing methodology for equities trading. And this is coming just a day before the new framework was scheduled to take effect. It was supposed to start today, and this is according to the Group Head Communications and Partnerships at the Nigerian Exchange Group, Mr. Clifford Apollo. He said a planned framework, what is supposed to be from today, that's supposed to affect the pricing of stocks, was supposed to be that Group A had, for stocks priced 1,000 naira and above, required 10,000 units with a 10 kobo price tick. And then Group B had 500 to 999 naira 99 kobo, requiring a minimum trade of 50,000 units with a 5 kobo price tick. And then Group C, there you have it. This is what was supposed to take effect from today for the price range of 1,000 and above, a minimum trade of 10,000, price tick of 10 kobo. Talking about the price change, that when the price can change, that is what this is about. And then for stocks valued at between 500 naira and 999 naira, they're supposed to do a minimum of 50,000 units before there can be a price change. And then for stocks valued below 500 naira, they must have a minimum trade unit of 100,000 before they can be a price change right there. And we are having the director, your registration, exchanges and market infrastructure, the Securities and Exchange Commission, joining us this morning to help us understand more about this. She should be joining us from our Abuja studio. I wonder if we have joining us for the program at this time, Mrs. Hafsat Rufai. Mrs. Rufai joining us from our Abuja studio at this time. Good morning, Mrs. Rufai.
Good morning.
Well, thank you for coming on the program. I think we just have to start with the first one, which is what was supposed to start today but has been postponed. Can we know why the Securities and Exchange Commission is postponing the starting of this?
Okay, so good morning again. I guess you mean the postponement by the NGX, that is the Nigerian Exchange Limited, I beg your pardon, of the new pricing methodology. Now, the NGX had to postpone that because it decided to have more engagement with stakeholders before implementing the new pricing methodology. The pricing methodology has duly been approved by the Securities and Exchange Commission, where I work. And when we approve the rules of the NGX, it is up to them to determine the appropriate time to commence implementation. In this case, the NGX had gone on air or had informed the public that it was going to start today, but the NGX then realized that there's need for more engagement. And this is because we have been using the old or the current pricing methodology for a very long time, and people need to understand the change that we're bringing about, introducing the various bands that were not there before. And so they felt that it shouldn't be so abrupt, changing such methodology without adequately engaging the stakeholders. That's why the change, that's why implementation has been put on hold in the meantime. But I'm sure that at the appropriate time it would commence.
Yeah, I mean, since we have you here and you did talk about the engagement and helping more people understand, could you help us to understand the workings, what all of this means, and what it could, how it could apply, to investors and all of that?
Thank you. So currently, for prices of securities to change at the NGX, 100,000 units need to be traded. All right, so that is to affect the closing price for a day compared with the closing price of the previous day. So we allow a band of 10% up or down from the previous day's close. However, we discovered that we could do better with price discovery. Some years back, we didn't have high cap stocks where prices are above 1,000 naira, for instance. And then, looking at all that is happening now, the market is growing, interest is improving in the market. When I say interest, there's more participation in the market. People are getting to know more about the market and doing more transactions. So we just felt that there will be more appropriate price discovery if we allow the tranching, that is applying bands when it comes to the volumes to be traded. So for instance, rather than stick to only 100,000 units of shares to be traded to change the price compared with the previous day's closing price, we now have 3 bands. The first one being 1,000 naira and above. So with shares of 1,000 naira and above, when the implementation commences, we would need only 10,000 units to be traded before the current day's closing price can be affected. Compared with the previous day's closing price. The next band is the band that is slightly below 1,000 naira, so 999.99 naira. That's not 999 naira 99 kobo to 500 naira. That's the next band, and then you will need only about 50,000 units to change the price of stocks in that band compared with the previous day's price. And then the last band being the stocks are below 500 naira each, would still remain in the 100,000 unit band. So with this, we have stratified the market, delineating between low cap stocks and the high cap stocks, and then prices will then change in that manner. So you don't need 100 million units to be able to, 100 million naira, for instance, to be able to change the price of a high cap stock anymore. That's what we're saying. So I think it will just democratize the market more. It will also allow better price discovery. So you are not bound to do very huge units before you can reflect prices appropriately. That's what it's about.
All right, thank you. And also late last week, the SEC talked about 5 p.m. Deadline for T+1. Could you help us understand what that means?
Oh, thank you very much. So the capital markets hitherto, so I need to explain what T+1 is, and then I'll talk about the 5 p.m. deadline. So hitherto, we were on T+3 settlement cycle for several years. And then last year, we took a decision that we need to do more with modernizing our markets and increasing its competitiveness, its attractiveness, liquidity, reduction in settlement risk, and so on. So we changed the settlement cycle to T+2 on November 28th last year. And then on 1st of June this year, being 1st of June 2026, we migrated from T+2 to T+1. Now, T means transaction day or the trade day. When your shares are bought or sold on a particular day, that is day T. And then +1, which is the current settlement cycle, means that when you buy your shares, say for instance you buy today being a Monday, the shares will settle in your account by 5 p.m. tomorrow. The emphasis on 5 p.m. is that over the years, when we were on T+3 or T+2, settlement time was 8 a.m., meaning that if you buy your shares today on T+2, that is trade date, and then 2 days after, which would have been Wednesday when we were on T+2, you would get your shares if you bought, or you get your cash if you sold at 8 a.m. Now, we decided that we need to do better for the Nigerian market by shortening that cycle. So why buy today and wait for another 48 hours or thereabout, or 2 days before you get your securities? So we shortened that transaction cycle or settlement cycle, I beg your pardon, to T+1, meaning that the trade day and a day after. That's the first step. And then we decided that, well, settlement will not be 8 o'clock in the morning. It will be 5 p.m. in the evening. The reason being that we also extended trading hours. If you recall, we extended trading hours earlier this year from 2:30 to 4 p.m. at the NGX. And then we thought if market closes at 4 o'clock and we ask people to settle, that is to provide cash and securities at 8 a.m. the next day, that's kind of close to being T+0. It's almost as good as just tell me to pay today. And we don't want that strain. What we want to bring about is competitiveness, it is relief, it is satisfaction with our market. So we changed the time that people had been used to as 8 a.m. for settlement to 5 p.m. in the evening. But of course, we then reduced the number of days. So if you buy your shares today, you get your money by 5 p.m. tomorrow. If you sell your shares today, if you buy your shares today, you get your shares by 5 p.m. tomorrow. If you sell your shares, you will get your cash by 5 p.m. tomorrow in your bank account. And that's why we need to emphasize the 5 p.m. because, I mean, for something that has gone on for almost 30 years, people had known our market to be an 8 a.m. settlement market. Now it is a 5 p.m. settlement market. So we needed to put that out in the public so that people would know that they're not putting too much strain on them with the initiative.
And the T+1, how's the adoption been? I guess it's convenient for domestic investors, but I heard things about some complaints from the international investors. How's the adoption, especially from that end?
The adoption has been great. Everyone is happy. So the international investors now, I would say, are represented by the local custodians here in Nigeria, who have a trade association known as the AACN, Association of Asset Custodians of Nigeria. These are made up of custodian banks in Nigeria. Feedback from them has been excellent. They are happy with T+1. The local investors are also happy with T+1. The fear initially was around the availability of cash to settle. Time zone being one of the major considerations. Sometimes, I mean, in some countries, when we are closing our market at 4, it's still early in the day over there. Sometimes it's even longer than being early in the day. It's midnight in some countries. And so everybody was concerned about how to source cash or how to source funds for settlement. But knowing that it is not at 8 o'clock, it is 5 p.m., I think that gives enough time for the custodian banks, who are representatives of those investors, to source the funds required and settle the securities and cash as well, because it's a DVP market. It's a delivery versus payment. So far it has been good. We haven't recorded any default as a result of unavailability of funds to settle at that time.
All right.
So, it's just a matter of letting everybody understand that the settlement time is not 8 a.m., it is 5 p.m. And with 5 p.m., everybody is good. So far it has been good. Feedback has also been very excellent.
All right, good to hear that, Mrs. Hafsat Rufai, Director of Registration, Exchanges and Market Infrastructure at the Securities and Exchange Commission. Thank you for taking out some time to explain all of this to us.
My pleasure.
All right, now other company stories. Now, Odua Investment Company Limited has announced that GCR Ratings has assigned the group a national scale long-term issuer rating of AA-NG and short-term issuer rating of A1 plus NG, with a stable outlook in recognition of the company's strong portfolio and conservative financial profile. This inaugural rating underscores the group's robust financial profile, high-quality investment portfolio, and disciplined capital management. While commenting on the rating, the group chairman, Mr. Tola Kasali, said that the rating is a strong endorsement of the group's 5-decade legacy of prudent stewardship and value creation, affirming the resilience of its investment model. And this, combined with strategic holdings, he says, has led to contributions from its operating subsidiaries, and he notes that the AA-NG rating reflects the group's conservative leverage, strong liquidity, and quality of its underlying assets. For the Group Managing Director, Mr. Abdulrahman Yunusa, the GCR's rating confirms the group's strong liquidity coverage of approximately 2x over the next 24 months, supported by a liquid listed portfolio valued at over 80 billion naira and encumbered cash of 4.8 billion naira. Still on company stories now, the chairman of the Economic and Financial Crimes Commission, the EFCC, Mr. Olanipekun Olukoyede, has led a major breakthrough in the commission's ongoing investigation into the alleged criminal aspect of transactions involving Nestoil Limited and a consortium of its lenders. At a meeting convened and chaired by the EFCC chairman, a structured repayment plan was agreed between Nestoil Limited and the custodian of lenders as part of efforts to recover outstanding indebtedness. The agreement has already yielded significant results, according to the EFCC, with $60 million recovered from Nestoil Limited and paid to the consortium during the course of the investigation. The payment by Nestoil, facilitated by a team of operatives from the EFCC Lagos Zonal Directorate 2, led by the head of investigation, Mr. Guzi Moses, represents a significant milestone in the Commission's commitment to promoting accountability, protecting the interests of financial institutions, and safeguarding depositors' funds. While welcoming the payment as an encouraging development, the consortium of lenders note that it represents only the first phase of the repayment process, as a substantial portion of the outstanding debt remains to be settled. The lenders reaffirm their commitment to working closely with the EFCC and other relevant stakeholders to ensure the seamless continuation of the recovery process until the outstanding indebtedness is fully liquidated. The lenders also reiterate their commitment to supporting the EFCC by providing all relevant documents required for the diligent prosecution of the investigation, while ensuring that all parties comply with the law and that recovery process remains lawful, transparent, and commercially responsible. The EFCC reaffirms its resolve to pursue the investigation to its logical conclusion and to ensure the full recovery of depositors' funds in accordance with the law. And directors and federal commissioners of the Revenue Mobilization, Allocation and Fiscal Commission, led by the chairman, They had a meeting with journalists in Lagos to discuss the structural repositioning of the commission to better serve its purpose through the launch of strategic communications and institutional reform initiative. The reform, according to the chairman, is to ensure that every naira due to the federation is properly monitored, fairly allocated, and transparently accounted for.
Our strategy is built on 5 core pillars. Institutional clarity. We will clearly articulate who we are, what we do, and what we are not. We are in the process of showing more transparency through technology. We are modernizing our digital platforms. This will introduce accessible revenue allocation dashboards and strengthen data accessibility so that Nigeria can understand how resources are distributed. And the RAMFAP will play a visible role in shaping national conversations around revenue, diversification, allocation, reform, and remuneration governance. Reform begins within. Our commissioners and staff will operate under a unified messaging standards, strengthened operational discipline, and enhanced performance transparency. Safeguarding neutrality.
Yes, and that's it. Having a meeting with RAMFAC, I was at that meeting there. I must say it was a great pleasure. Opening up themselves for conversations and questions from journalists is a rare one, and I hope that it is being sustained, especially when you look at the issue of diversification, which is a topic I would really like to have with them in the future. Hopefully, I'll get that opportunity. But let's take a break now. When we come back, everybody, well, not everybody, a lot of Nigerians are rejoicing over the elections in Osun State. It was the story for the weekend and is going to be for the next couple of days, the win of the incumbent governor. But we're a business, so we're looking at election spending and what it's doing, and this is just a small one. The big one is coming, the general elections. That and other issues is what we'll be discussing with Dr. Muda Yusuf after the break. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. Let's discuss electioneering activities and the risk of inflation. Not a new topic, but getting close to us. And then we'll talk about the reality election periods. Then to encourage accelerated government spending, incumbents seek to complete projects to impress, obviously, the voters and demonstrate performance. There's also increased expenditure on infrastructure, social programs, especially, and other politically visible interventions that can further strengthen aggregate demand, arrests our allowances. All of that is being considered. Now, these are the official ones. You also have the unofficial spending, but all of these will meet together at the economy and increase liquidity. And I wonder if that happened in Osun State, but I guess it's too early to discuss the impact of spending, election spending in Osun State. Just concluded the election over the weekend. We have the Chief Executive of CPP, Dr. Muda Yusuf here. Maybe he has some numbers. He's an economist, and we have a journalist. Dr. Yusuf, good morning. Do you have the numbers? The spending in Osun State, or perhaps has it changed anything?
It's very difficult to capture data when it comes to this kind of spending. But definitely there are a lot of spending.
And there are allegations of vote buying. That's involved money.
And all manner of figures.
Yes.
50,000.
Did you hear during the jubilation, the people were singing something about 50,000 naira?
Yeah.
So if that was the offer, that's a lot of money to go.
In fact, even at that subnational level, there must have been some significant injection of liquidity in the local economy.
Legal and illegal.
Legal and illegal. So generally, it's a concern, even at the level of the central bank. concern has been expressed as to the likely implications of election spending, for inflation and even monetary policy. Although we don't have empirical data to properly, capture this narrative, the impact of election spending on inflation. But definitely there's a lot of liquidity that normally comes with elections. There is the official one, just as you said, the agencies involved in the election, administration, mobilization, procurement, and all of that. So that's a whole lot, and that's a very big budget for INEC. And from now till the end of the year, up to January, those spendings will continue to come in. Then, of course, there are also spendings at the level of the political parties. Because for many of these parties, they have been also stocking up money preparatory to the elections. So it is when you get closer to the election, that is when they begin to push out all of this money. Then above all is the spending by the candidates themselves. The moment an administration starts, those in government are already preparing for the next election. And they're already accumulating all manner of resources, towards the next election. So we also expect a lot of spending to come from the candidates themselves, across all the level of, elective offices there. So all of these things together normally create serious liquidity issues during the election. But of course, also create opportunities for business. Because some of these spendings, services have to be provided, ballot papers have to be printed, booths have to be, ad hoc staff have to be paid.
T-shirts have to be printed, pictures.
Adverts have to happen in the media.
The media is also scooping some of the liquidity.
Exactly. So on the spending side, there are also businesses that also benefit from it. So it's not all.
But this is the headache to the central bank, the monetary authority.
Yes.
What can they do? How should they reposition or position for these inflow that most likely will hit the economy?
Well, just as the CBN has hinted, part of the reasons why the CBN has been very cautious in its monetary policy easing is also this possibility of the inflation risk, that could come as a result of the election. So as we get close to the election, the CBN is also likely to be cautious. They may not further tighten because we have almost reached the limit of
especially the CRR.
the CRR and even the MPR, at 26.5. These are very serious levels of tightening. But the possibility of easing is very unlikely, given all that is happening.
All that's happening, both domestic and globally.
So those are the kind of. So what I expect the CBN to do is to remain on the very cautious side, taking into account all these possibilities.
Yeah. And then we see, looking at after the election, even before now, for instance, we see Lagos State's budget trend there, and it's not just Lagos, but Lagos is the commercial capital. So I guess we have to start with Lagos. And we've seen FAC increase since the removal of subsidy, and states are supposed to have benefited from it. So we see, for instance, Lagos State has had 153% increase in their revenue from the allocation of the federal government from the center. Let's see other states also, apart from Lagos. I believe we do have Delta. We have, there you have it. Delta has had 247.
Budget, yeah.
Yeah. So I believe that budget trend.
Yes.
This is an oil-producing state, so they also have
the derivation.
The derivation has also increased with the increase in the price of global oil. And then also I believe we have Kano State. We also captured that. There you have it. So this is 568% higher. This is from disconnected to FAC.
It is related to FAC.
More than almost 600%.
And it's a reflection of the fact that the states are major beneficiaries of this reform, especially from the revenue point of view. And that is what is reflecting in the trend. This is over 5 years. This is the growth.
2022 and
Yeah, this is the
2026.
growth in their budget. You can see for budget to increase by over 500%. And even for a particular state, it was close to 700%. You know? So it's a reflection of what is happening at
But this
level.
reflects with the people. I remember some time ago, I tried to get some states into conversation as to, you have increased revenue now from FAC. What have you done differently? What new thing have you done? And it was really difficult to get, number one, state officials to come on the program to discuss it. And even when they came, a few that agreed to come, for them to pinpoint and say, okay, we've had an increase of 100 million, for instance, and this is where we're channeling it to. Everybody seems to say, oh, we're working on infrastructure. You know, the normal political statement. Is it because as a country, we don't have the culture mostly of intentionality to say, well, if I have, because as an individual, if my salary is increased today, I need to be able to measure that increase and know where I'm channeling it to. That's how I can measure the growth in my welfare.
Yeah.
You know, but when you now put it on a national scale, it seems really difficult to be able to trace. We have subsidy saving. We know that the minister has promised us they're going to give us a breakdown, of that. Okay, we've had savings from subsidy. This is where it's been going to. And I can see it's not just, on paper. So if we have this increase in state budgets and all of that, then we should be able to feel the impact as citizens.
We should. And you see, there is a demand side and there's a supply side. Let me analyze it from an economic point of view. As citizens, we have responsibility to meet demands. Because that is what democracy is all about. Because when we talk about fixing the economy, fixing the challenges of poverty, infrastructure, it's a shared responsibility between the federal and the states in particular, and maybe to some extent the local government. Because if you don't make demands, politicians will just...
So you're saying that most Nigerians are not placing enough demands.
We have to put pressure on them, yes. The responsibility of oversight at the subnationals rests with the state assembly. I know what the state assemblies are. Between the executive and the legislature at the subnational, you can hardly, define the boundaries. So it is for the citizens as part of this democratic process to develop the culture of demanding accountability, of asking, because these are huge increases. Although people can argue that these are nominal figures, but even if you discount for inflation, it is still huge. So as citizens, we should not just leave these things to the civil society organizations. There's a limit to what they can do. We should also be more active in this democratic process to demand, because what we have seen is that most of these expenses or expenditures or spendings first are concentrated in the state capitals. And the state doesn't belong to only those who are in the state capitals.
And Dr. Buddha, the funny thing is, as a journalist, I step out and I say I want to do a Vox, public opinion and take people, and you want people to talk, and people actually run away. And I'm asking, if you don't want to talk, and then you go back home and you're suffering the consequences of lack of accountability, for instance, from the government, who is going to bail the cat? Who is going to do the battle for you? Yeah. So people don't want to talk, and yet they want the benefits of a democracy that everybody's supposed to contribute to.
Well, that is part of the sensitization that we need to do. Because, this democratic space is a journey, and it's a long journey. And we need to build that culture through regular sensitization. That when you vote people into office, please demand accountability. It is not for nothing that all this data are on the website. The allocations are on the website. Every month we hear that they share this, they share that. They take derivation, they take VAT, they take electronic transfer. So much money. This is a public space. So we should, as part of citizens, advocacy or activism, we should regularly demand accountability. And the kind of projects they embark on.
Yes.
How well are those?
We have a slide for that. Some of the projects that they should focus, because a state that does not have a lot of commercial activity, building an airport, and you wonder for who actually? Is it just for the governor when he wants to travel?
That is it. This may benefit the elites, but you see, have a vast majority of the populations in these states. Some of them don't have potable water to drink. Many of them don't have good health services. They don't have good education for their children. The rural roads are terrible in some of these locations. And unfortunately, most of those who are outside the state capital are the very silent majority. They don't have a voice, they can't tweet, they can't go on.
The media is not reaching out to them.
The media to concentrate on the state capital,
commissioning to go and meet them.
Commissioning the flyovers and all these big buildings. So we have to be more deliberate to ensure that spending quality is such that really impacts on the lives of the majority of the people.
All right,
those things are very
Dr. Muda, even as the media, we have a responsibility to reach out to those, especially in those hinterlands and all of that. And we promise our channel that we'll do better.
Okay.
But I mean, the people spoke in Osun State.
They did.
I saw some illustration saying that Osun was about to fall, and then the people's vote, people's attention came in and was able to save it. Because I guess if not, it would have been another story.
Exactly.
Well, thank you so much for your time, Dr. Muda Yusuf, and thank you for sharing all of that with us. Well, talking about programs of the government, the latest one that the president has endorsed is the new deep water rules, and the president says this is a strategy to get fresh $50 billion oil capital into the economy. Let's understand this and much more with Ms. Boma Alabi, Senior Advocate of Nigeria. She's the Chairman, Shipping Association of Nigeria, and also the President, Shipping Agencies, Clearing and Forwarding. Thank you so much, ma'am, for joining us this morning. Please tell us about these new rules for deep water attracting fresh capital.
Well, good morning. And thank you very much for having me. I will start by saying, there's a disconnect between the public sector and the private sector. And until that disconnect is dealt with, we will hear about all of these policies for attracting investment, and we will not see the outcomes that we require. Unfortunately, government does not engage enough with the public sector in the way that policies are made, in the private sector, and in the way that policies are made and implemented. As a result of which, there's a lack of understanding of how investment decisions are made, and therefore what it requires to get investment in the right place. So this is not the first, it won't be the last, but what are the outcomes? And unfortunately, I'm not very optimistic that the strategy for the fresh $50 billion investment will actually yield the desired results.
Wow, well, I don't know what to say, because right from there, it seems perhaps there's no need to even discuss this issue, because from what you have said, there was no engagement, and so are we just going to talk about this as another idea that will just come and then later on we'll forget about it? Looks like that's how you see it.
Well, unfortunately, I'm speaking from an industry perspective. And if you go back historically, you will find that what I'm saying is what actually does occur. Again, we see announcements of, government strategy, government very well intentioned, no doubt. But if you do not consult and engage with those whose funds you're seeking in order to understand what it will take for them to make that investment, then, I mean, you tell me from a practical perspective, what are the chances of success?
Any way to remedy this, or I mean, we just have to look somewhere else?
Government knows what to do if the will is there to do it. I as spokesperson and leader of industry, I have reached out on numerous occasions to engage and to say, consult. My constituency is where you're going to get that investment from, if it's going to happen. Because that's the private sector with the funds to invest. You have, for instance, your terminals. The shipping lines have invested and they're investing. MSC has got, I think about, I don't know how much, but it's a substantial sum of money, close to $1 billion in investing in Snake Island, Niger Dock, building a new terminal. We have the one that was built by and continues to be maintained by Grimaldi. We have the Lekki port, which is again one of the shipping lines. And so on. So you need to understand why we make those investment decisions, what is required to give them the confidence to make those decisions, and then work with them at this point of strategy, rather than rolling out something that doesn't make sense to business, and then they'll sit at the sidelines and watch you while you hold press conferences and nothing happens.
Well, honestly, I'm short of words, Ms. Alabi, when I hear you say this, and unfortunately, it's not new, this perspective that you're sharing, and now we have this. I must tell you, we were celebrating this a whole lot to say we can expect fresh capital into oil capital into the economy, but now that you said there was no consultation, so we might as well just tell ourselves the reality. But how are things when you talk about, apart from this perspective or plan or strategy by the president, how are things, do we have, how good or bad are things within you, the stakeholders, to attract fresh capital?
You know, Nigeria has, as usual, and I really, as a Nigerian, do not like this word.
Because huge potential, I know that.
Potential.
Unfortunately, I hate it too. Getting really tired of it, honestly.
I am so sick of being potential, and I really want to see implementation. We have the potential. We have, when we had the Bakassi judgment, what most people saw was Nigerians were displaced, and therefore it wasn't a win for us. It actually was, because we gained so much more acreage in terms of our space on the water, to put it simplistically, and therefore we have so much that could potentially generate beyond this $50 billion. That's nothing. But the approach is what continues to impede the progress. We have had the marine and blue economy declared, and 2 years now. What's happened in that time? Please tell me. What has changed?
Yeah, well, unfortunately, but thank you so much. We really appreciate your perspective on this, Ms. Bumala, Senior Advocate of Nigeria and Chairman, Shipping Association of Nigeria. Thank you for your time.
You're welcome.
All right, now let's go global. Well, let's start the global stories now from what's going on in the United Kingdom, and we have our London bureau chief, Olayinka Juliana, joining us this morning. Well, Juliana, your second name came first to my mouth. Well, Juliana, we hear that most likely you guys be paying more for water, the droughts, the extreme weather and everything, that's hitting from different sides.
Yeah, that's absolutely right. Good morning, Innie. We have received information from Ofwat, which is the water regulator for England and Wales, and they've come up with a potential pricing proposal, which isn't exactly new to Britain. It's already being trialled by two separate water companies in the north of the country, which basically would mean during seasonal conditions you would either pay more or pay less for your water usage. Now, as you know, Britain has been going through, well, some parts of Britain have been going through a drought over the past couple of months. In fact, in London in the southeast, it hasn't actually rained here for 2 months, which is almost unfathomable. But that's becoming the new norm now, Innie. So water companies are trying to say, look, if there is already hose pipes in bad, so basically you can't water your gardens, then perhaps we should look a little more intimately and look at water usage within the home. So if during the peak of summer you're using more water than your neighbour, you should pay more. If you're on holiday for a couple of weeks and you're using less water, you should pay less. And I think the figures are not that steep. We're looking at potentially £18 a year more if you are one of those customers, but it is quite interesting, and it's part of an ongoing debate in this country about how we handle severe weather, which is likely to become more prominent in the future.
Yeah, and I don't think that's letting up because even close to you around in Europe, there are also complaints of droughts and all of that. Unfortunately, people have to adjust in the use of water. And then we'll talk about the £50 billion reform. That seems to be getting some knocks that the vulnerable are being left out.
Yeah, I believe, so this is Reform UK. So Reform UK, they have become quite prominent over the past couple of years, although I don't want to scare our viewers who are living in the UK, because to be honest, it has got quite scary. I'm sure you saw the reports of that Professor Jason Arday, who was hounded by the media. So there are lots of fears about far-right sentiment in the UK, and some would definitely consider Reform UK a far-right component of governance in Britain. They are not yet in power, but Robert Jenrick, who was a prominent figure in the opposing Conservative Party, now the spokesman for Reform UK's Treasury, he's put out a plan basically saying that £50 billion of welfare money in the UK could potentially be saved, and it could be saved by preventing foreign nationals who are legally living in the UK from accessing that money. So, of course, Nigerians fall under that category. But also, quite surprisingly, is the EU. So if you are a European citizen and you're living in London and perhaps something has happened to your health, or you would have been able to access some welfare, Reform UK are saying absolutely not, that should be stopped. So he's gone into a series of reasons why and how they can, basically save Britain. I think it's about £21 billion a year. But again, Reform UK are not in power. Every so often we do see some of these alarmist headlines from them. But, this is a conversation that's going to be raging. One of the reasons why we've got Andy Burnham and not Sir Keir Starmer as Prime Minister anymore is because a lot of people thought that Reform UK's queries were not being resolved. So, yes. Yeah,
but Julian, I do know over there, I mean, you guys are really impatient. I mean, whether it's Keir Starmer or Andy Burnham, if you're not happy, we're going to hear your voice. And we hope you guys will give him a bit of time, to settle in before you start expressing You know, those very passionate expressions.
It's a good point. You know, 11 prime ministers in a decade is absolutely ridiculous. They're already calling for the head of Andy Burnham, but alas, he's on holiday, so we'll just have to wait and see what comes out in September. But you know, the British media is fierce, and going back to what I was saying about that Professor Jason Arday, he was hounded by the British press. The British press are notorious when it comes to getting what they want.
I guess every democracy needs that. But a bit of good news, fresh listings of homes lower, started. Yeah,
this is an interesting story from Rightmove, which is a very popular property portal here in the UK. And what they have noted for the month of August so far is that property prices in the Royal Borough of Kensington and Chelsea, the asking price has been reduced by about £100,000. So typically, if you want to live in Kensington and Chelsea, you'd have to spend about £1.6 million. I can't do the calculation in Naira, it's a lot of money. But they've noted that the asking price has come down to about £1.5 million, 1.59 million pounds. So yeah, just under £100,000. This is not just peculiar to the Royal Borough. They're also seeing price fluctuations across the country. There are several reasons for this. One of them is the season. A lot of people, of course, are still traveling. So typically, you know, properties are not just being put on the market. But then also we do still have quite elevated interest rates. So we know that mortgage repayments are much higher. So some buyers are reluctant, which means sellers have to withdraw. And also, which is quite unpeculiar, is the fact that there are now more properties on the market. So this is more of a buyer's playground than it is a seller's playground. So depending on what side of the line you stand on, this could be seen as a good story if you're a buyer, but then of course paying over £1.5 million for a home, I'm sure you've got the extra £100,000 change.
Yeah, interesting there, Juliana, but thank you so much and enjoy the rest of your day. And still in the global space, let's see expectations for the week. Today, Monday, from China, we expect unemployment rate. And then from Canada, the core consumer price index for year on year. Tomorrow, Tuesday, from the UK, where Juliana is, unemployment rate is expected tomorrow. And in the United States, industrial production month on month. On Wednesday, UK core price index. And then Europe final core price index. That will be out on Wednesday and Thursday. Australia unemployment rate, and from the United States is unemployment claims, and we know that always leads some investor sentiment. And for Friday, Japan national core CPI year on year is expected. From the UK, public spending, public sector net borrowing, that's expected, and Europe consumer confidence, that's also expected from the week. And that's all we can take from the global space. And that's it on the program. Thank you so much for being a part of it. I'll be back at 1:30 for Business Incorporated, taking you around the world of business in 25 minutes. I'm Amy John McClain. See you then.